The following is a presentation of TFNN, The Trader's Edge, with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the December 10th, terrific Tuesday. I love Tuesdays. The terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go look at one of our tools. Usually I save this tool for when I do Tom's show. I love this is my favorite tool, one of my favorite tools. It's called Become an Ant. Maybe you've heard it before, but let's review it. You know, ants, they live by a four-part belief system, a success philosophy. Let me say that again. A success philosophy that, in my opinion, each of us should live by. Their belief structure goes like this. Belief number one, ants never quit. If an ant is headed somewhere, think about it. If an ant is headed somewhere and you try to stop it, it'll find another way. They'll climb over. Just do it. Do it the next time you see an ant. You know, we get to see those ants all the time, year-round, down here in the south. Of course, up in the north where it's a bit cold, they're probably buried underneath the. I know they're buried underneath the ground. But what they will do is they'll climb over, they'll climb under, they'll climb around. They keep looking for another way. Folks, never quit looking for another way to get to where you are supposed to go. Belief number two: ants. This is important. They think winter all summer long. Now, that's a really important perspective because guess what? As most of you know, summer does not last forever, and therefore ants gather their winter food in the middle of summer. Now, belief number three, this is what you folks, everybody up in the Northeast, I think it's snowing pretty much everywhere except for here in Florida, they think summer all winter long. And I think this is even more important because during the winter, the ants remind themselves that winter won't last long. And they say, we'll soon be out of here. And on that first warm day, the ants are out. If it turns cold again, they dive back down into earth. But as soon as it warms up, they can't wait to get out. Belief number four, how much will an ant gather during the summer to prepare for winter? You got it. All they possibly can. This, my friends, this is the way to live. Never give up. Always look ahead, focus on what you want, stay positive, and most importantly, do all you can do. Let's go check out and see what these markets are doing here. Right now, Dow futures up 56 points. We're having our first retracement off of Jobs Friday out there. We'll go take a look at those levels. Right now, Dow futures trading out at 15,970. S&P futures off about 5 points. They're traded 1803.50. NASDAQ futures down 9, trading out at 35.10. You've got the Russell 2000 off 4 points, trading at 11.26. King dollar back 15 cents right now. It's trading at 79.85. We've got some movement in the currency. We got movement in the hard currency market. Goldilocks is up $28. Silver's up 65 cents right now. Light sweet crude, it's up $1.15. Our call-in number is 877-927-6648. If you give us a call, I'll be happy to take a look at your stock chart. We'll see what these markets are doing. A quick peek around the globe. It was a sea of red, slight sea of red over in Asia last night. Nikkei was off 0.25%, down 38 points. The Hang Seng off 0.25%, down 66 points. Again, another flat session over in the Shanghai. Right now, the DAX in Germany is off 0.8%. It's down 74 points, and off 0.5% is the FTSE in the UK. It's trading down 32. But let's go take a look here at our futures. Let's go see what we've got. Let's start off by, let's go over and, what do we want to take a look at? Let's look at the, well, first, the question might be, hey, Steve-O, what's going on here? Why are the futures trading lower this morning? Hey, look, it's nothing more than just a normal move. Of course, part of that normal move here is because of that Euro-Japanese yen. If we take a look at the Euro-Japanese yen, pretty much completed the 1 to 1.618, A to B equals CD. Your A point on that coming off of the low from August 12th. Your B point is up here on September 18th. Your C point is down at the low on October the 8th out there. And what we also know is on the daily chart, when it comes to the Euro-Japanese yen, it's sitting at 1 to 1.618, A to B equals CD. We also know it's up against some pretty stiff resistance on the weekly, on the monthly charts out there. So it needs to take a little bit of a pause. Also, you can see here on the daily charts, if you're following us here at TigerTV, what you can see is if you're watching this, if you're listening on the radio, I'll describe to you what it is that we're looking at, or maybe your mobile device at TFNN.mobi. So many great ways in order to be able to get this show. Of course, you can get the live stream of this by going to the homepage of TFNN.com. Upper right-hand side, 3 buttons. Click on those buttons. You'll see this show streaming live, and you'll see my chart. It's of the Euro-Japanese yen. As this was making a high here yesterday, we had that relative strength indicator, the 14th period relative strength indicator, up at about the 80 level. That starts to get into that extreme area. So far, it's just backing off a bit. That's what is putting some pressure on the U.S. markets. Of course, if we go take a look at the U.S. markets here, what we will see is that the push down is getting into that extreme. And I do mean extreme sold territory. So that's why we're going to see a little bit of a bounce here coming out of, coming into the market open. It's just got to work off a little bit of this oversold condition. Again, this is a 30-minute chart that we are taking a look at. The question's going to be if, in fact, you see the ES Mini get back above the 1808-ish range. It could be 1808 and a quarter, 1808.50, somewhere right around that level. Then that will get it back into the bullish camp out here. Right now it's traded at 1804. So this retracement, this first little bounce out of this oversold condition, this is going to be the key to probably setting the pace here for the day. Now, if we come back a bit further, if we come and take a look at off of the Jobs Friday low, so when was that? That was, well, I guess that was probably right here, right? Yeah, that was at 9:30. So let's take a look at we're going to take a look at 2 retracement levels. The first one we're going to take a look at is a natural one. That's coming off of a swing point, and that took place at 2:30 in the afternoon, December the 5th. That's out at 1782. Now let's also come after the Jobs Friday area. Let's come here at the 8:30 a.m. time frame. You had the ES Mini. It was down at about the 1790 level. What we can see here is that 1800 even is your 0.38 to your dead cat bounce area coming off of that most recent swing point low there from December 5th. Now let's take a look and see what the retracement is off of the Jobs Friday number out here, and let's see if we've got any kind of convergence. Yeah, so right around, let's make this a different color. Let's try to make this red. There we go. So right around the 1798 to 1800 level, that should be some pretty decent support there. The reason that I say let's take a look at expansions as well. We're going to try to identify where there may be some Fibonacci numbers that are coming together here. Let's take a look at this expansion. This would be from 6:30 in the morning on December 9th all the way up to, really, it should be all the way up to here. Yeah, 1.272. So if we want to understand where price stopped here today so far at the 1802.91 level, if you take a look at your expansion of swing points, that's at 6:30 a.m. That's at 1804.75 as the price point, December the 9th. And what I would use here, I'd use this is a 30-minute chart, this little fourth peak D, as you would say, for using the Chapman wave out here. That occurred at 4 a.m. this morning out at a price level of 1811.50 out there. So you've seen the 1.272 expansion getting into the extreme overbought level. One of the RSI indicators I used, got us down to about a 3 level. I'm going to teach folks how to use that on December the 19th. At least all of the subscribers, I'll be able to teach that. And we're going at TFNN, I think we'll have something up here later on today, so it'll be easy for you to be able to attend that workshop as well out here. So we're seeing a little bit of a bounce. Now the key is going to be, as I say, is where is this bounce going to take us to? So we know why price has, in essence, this morning stopped where it has stopped. Now we want to see what kind of, I'm going to take some of these things off the screen. Now we want to see what kind of retracement takes place inside of the market. If we take a look at the high that was put in at 4 o'clock this morning down to the low so far. Just a normal bounce out here, normal dead cat bounce takes you to 1805. Remember I said 1808-ish, 1808 and a quarter or so. That's going to be the key level. Now it's going to be a key level because that is your sweet 618 retracement now on the way back up. You see it close back above that. That says, okay, the selling pressure for the day is over. If 1808-ish holds, what that does is that sets up your A to B equals CD down. Again, this is intraday, intra-cycle trading that we're taking a look at here. Now, it works this way on all time frames, these levels that we look at, expansions, contractions of swing points, and obviously other tools out there. Now, let's go check out the metals market out here, because we've seen a lot of movement inside of the metals. You've got, there we go. Let's go take a look at Hi-Ho Silver. Right now you've got silver. It's trading up about, 67 cents out here. So you've got silver really trying to break out. Where's my silver chart out here? There's that silver chart. Come on. Where's silver? Where's Hi-Ho Silver? There we go. If we take a look at silver, silver still... You know, the question is this a real breakout? So far, volume behind the move, 25,000 contracts that we have out here. Thus far, it is rejecting the swing point from June 28th out here. So it's trading out at $20.37. I'm going to put up a couple of other charts for us to take a look at out here that we want to really be paying attention to. Let's go take a look at Goldilocks. Let's go see what gold is doing here this morning. That's trading up $29 after having a decent session yesterday. So we're seeing a bit of a break in both gold and silver. But let's do this, folks. When we get back from this break, let's go take a look at gold. Let's go take a look at silver. Let's go take a look at the euro, which means we're going to look at the U.S. dollar index. And then let's overlay the U.S. dollar index on these metals as well. 877-927-6648. Be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks, and welcome back right now. You've got the Dow futures. They're trading off about 49 points out here. And give me 1 second here, if you would. You it up. There we go. And, because this show here is played during the replayed during the 11 o'clock hour with Basil being out. He's recuperating for some surgery here. Let's go. Let me go do the let me make my best attempt here at covering what Basil does in the Dow. We'll take a look at the Dow Jones Index out here. We'll take a look at the at a couple of different tools. We'll look at the Chapman wave. We'll use the old peak counter out here. Now, Basil uses the letters A, B, C, D. What I've done here with my system is I've created, this is the Ensign software that I use out here. Yeah, go ahead, Al, let her rip. And
let's go surfing now. Everybody's learning how. Come on a safari with me.
So we're going to do a little Chapman wave out here. Now we're going to start with the most recent low that came in. This was the October 9th swing point. What you can see here, if you're watching us on Tiger TV, you can see how price moved right down into the black little line you see, squiggly line on my screen. That happens to be the 200-day moving average or 200-period moving average because, you can use the same. You can use the same moving average on a different chart out there, different time frame chart is what I should say. Now, what I've got here is this little peak counter. I'm going to just click on the October 9th level. I'm going to go ahead. We're going to count the peaks on the way up, or the system's going to do it automatically. So there you can see. No, I'm just using numbers instead of letters out here. You can see it achieve this little peak F, right, or peak F, fourth peak, this D level. That was back on November the 1st. Went ahead and restarted. Had an inside day here on that very next session. So when you have an inside day out there in the Chapman wave, that allows you to do that instant restart. So if we take a look at what the actual Dow, this is the daily chart we're looking at, it actually formed that peak D again right here on November 29th. Now, the key is, as we pulled back, and what you can also see here right at the 16,000 level, so I've got multiple systems out here. That's your primary trading range boundary line on the daily chart here for the Dow. So holding that level is important, or coming back and testing it. Now, you'll see a blue line, a little blue squiggly line coming across my screen out here. And that's Basil's 9-period exponential moving average that he uses. So right now today, close today, because this is going to see a test of it most certainly today. The 9-period exponential moving average right now, that's at about 15,972. So yesterday, we saw price close above it. Of course, we had that move off of the low off of Job Friday. It got above that area. If, in fact, you start to see the little dance out there, the little surfing dance holding that 9-period exponential moving average, that would be bullish out here. You start to see it close below it. Then what we could be seeing here, now Basil doesn't use the A to B equals CD down. What you would be taking a look at, our down count, the move lower here, it made a small letter day as he would place it at the low of December 4th. I will second that motion out there, and that is that Friday's numbers need to hold. If we do see a close below Friday's low, in this case here, we'll just simply use the December 4th swing point. 15,791. That would then indicate inside the Dow that we really have seen a change in trend on the daily basis, and it would also likely set up an A to B equals CD down. So on the daily chart, what we are watching for today is going to see at the close, and we'll take a look at it tomorrow, can the Dow hold and start doing that 9-period exponential moving average dance out there, and that is holding about the 15,972 range. Now that's on the daily chart. Let's go take a look at the 120-minute chart, because we know Basil takes a look at that. And if we take a look here, you can see the peak counter if you're watching us on Tiger TV. And what it did was it made that fourth peak on the 120-minute chart here, coming in at 11:30 in the morning. That was on November the 29th out here. So it's a 120-minute chart. That was on the day after Thanksgiving. That was the high up there at 16,174.51. Now, it made that March lower. It went ahead and made that fourth low, or that D level low, that small letter D low, coming in at about 2:30 in the afternoon, and that was on December 4th. That's when we saw the Dow get down to 15,791. Now, if we start taking a look at counting those peaks on the way back up here and see what actually has formed, I believe we're at the second peak out there. No, the third. So what we've seen here is you've seen a move to that third level out here. So what we might see here this morning, one possibility, you also see the 9-period and the 200-period exponential moving average on the screen. That's the blue line. That's your 9. The black line is the is in fact the 200-period. But at close, one tick above 16,058.40. That'll set up your fourth peak using the Chapman wave. Folks, that was my best attempt, although no one can imitate. I can only imitate Basil. That's all I can do. 877-927-6648. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Races. We got the Dow off 16 points, trade out at 16,009. S&P down 2, trade out at 1806. Composite off 8 points at 4060. Russell 2000 off 2 points, trade out at 1127. Apple back $3 and change out there to the upside. Advanced Auto Parts AAP up a nice 3% this morning, up $3 and change. Goldman Sachs up $3. You've got Trinity Industries up $3. Antero Resources up $3. Praxair up $3. So you've got Rand Gold Resources up a couple. Agnico Eagle AEM up $1.48. 3D Systems up $1.69. To the downside here, Carl Icahn Enterprises lead the chart out there, pushing paper. What a paper pusher he is out there, putting out some more shares. It's down 8%. It's off $12 and change. You got Apple off $360. Decker's Outdoor down $256. Starbucks taking a little bit of a coffee break. It's off about $3 right now, trading out at $76.95. Union Pacific, they are down $1.70. Boeing's off $1.67. Pep Boys, that's down $1.61. Now, let's go take a look at light, sweet crude. Black gold. Texas tea. As we go take a look at light sweet crude right now, it's trading up $1.09. That's up 1% out here. Let's go see what it is doing. Looks like we have a real breakout that is occurring here. It's on its way up to $99.59 out here. Had a nice wide-ranging bar. Markets don't end on wide-ranging bars. We had a nice one on December the 3rd. A little bit of, just kind of taking a rest here over the past several days. But $99.59, that should be the next stop. Now, the real key when it comes to light sweet crude is going to be what happens on the first retracement. I expect it'll get to $99.59, $100, somewhere right around there. And then we see what happens on a pullback. And is that pullback going to set up an A to B equals CD? Light sweet crude did break through the downtrend channel line that it had been traveling in. Also got down into that $93 area. This $93 area is a very strong primary trading range boundary line out there. So we'll see what happens with light sweet crude. But it is on a breakout, no question about it. It has changed its trend. It's changed its trend on the daily basis, I believe even on the weekly basis. Let me take a look at light sweet crude here. Let's put that up on the chart. And then we'll go take a look at the metals, but let me take a look at light sweet crude here. We're going to look at the continuous contract. That way I've got more data here to compile all my information. So yesterday you did have a little bullish or bearish engulfing candle out there. That's being erased today. That just gives you another idea of the strength behind this move that we have out here. Let me look at the weekly chart for light sweet crude. Yeah, and if you get a close above, let's see here. this week right now. If you're close above 98.10, you're at 98.36 right now. You will have a breakout on a weekly basis in light sweet crude. What does that really set up? Well, that sets up a move beyond the $99 range. The normal move would be up to about the 105 area inside of light sweet crude. Now, let's go take a look. And we look at gold and silver. But first, we've got to really take a look at and put this in perspective. What's going on inside the U.S. dollar index? And that means we've got to go check out the Queen. What is going on inside of the euro? And we take a look at the euro out here. What you're going to see, this is the weekly chart that we're looking at on my screen. And right now you can see that price here, if we take a look at this candle, today's candle, well, this is the weekly candle, so I should say this week's candle, you can see it's bumping right up against a red diagonal line to the downside. And you might say, hey, Steve, what is that red diagonal line to the downside? I am glad you asked me that question, because if we come all the way back into the 2008 time frame here, you will see that that is the downtrend channel line. There's two lines I've got on my screen out here. You've got the black line, and that's coming off of the highs. That's coming off of the emotional highs, because those are the wicks. So if we come off of the, so the red line is coming off of the open or the close out here. The top is coming off of the wicks, and that really becomes our trend line to determine whether or not there's a long-term change in trend in the market. Now, if you are a believer, that the commodities, such as light sweet crude, such as gold, such as silver, are going to go ahead and align themselves with regard to the U.S. dollar index, which they typically do. If you are a believer that that is what is taking place, then what you really need to see inside the euro, then you also if you're going to maintain that correlation impact with regard to the U.S. dollar index and commodities out here, if you're going to do that, then you have to believe that the euro is going to go ahead and break out of this descending price channel that has been in place since 2008. Last time we were up here was just a few weeks ago. That was back in October. October the 25th is when we saw a test of that area, a rejection of that area, big bearish engulfing candle to the downside. Now, that big bearish engulfing candle to the downside, that says that the high of October 25th, and that is at 1.3831. Let's take a look at it. That says that that is going to be your resistance area. We'll go ahead and draw a black line across the screen. Now, let's make that a red line, right? Let's make it the red line out there. Ooh, red. So that is your resistance area. So that means that what we could see take place here over the course of the next day or so, you could see a little punch up into that resistance area. But if this week, in order for the euro to break out, it's got to get above that dark color, that black line out there. So you can see we've got two price channels out here. You've got the longer-term one to the downside, and you have this little rising price channel that is taking place off of the lows back here in July of 2012. Which one is going to win? I can't tell you. What I can tell you is that it is absolutely up against a strong level of resistance. So we're going to be paying attention to this closely here, because it has a big impact on the U.S. dollar index. If we go take a look at the U.S. dollar index, only because of the weighting structure of the euro inside that currency pair. Right now you're seeing the U.S. dollar index pull back. Looks like maybe it wants to get down and make a Gertley buy, the 0.786 Gertley buy pattern on this, so this would make sense, and this would coincide with the with what's going on inside the euro. If we take a look at what that move looks like here, the 0.786, that takes you right to about the 1 to 1.618, A to B equals CD, right around the 79.60, 79.68 level. You're at 79.94 right now. So that's where you'd be looking at for the U.S. dollar index to go ahead and make its reversal. Of course, you would see a candlestick that, in fact, would indicate that that's the pattern that would be underway. And why is that important? Well, let's just go pull up the gold contract out here. Here's the daily contract, so you can see, certainly having rejected the June 28th level. But let's go ahead and add to this chart here. Let's add the overlay of the U.S. dollar index. So let's do that. Give me a moment here to put that on here. Let's put the DX #F, and let's go ahead and invert it. Now, I'm going to invert it because that way when the U.S. dollar index is getting stronger, this will actually show the line moving down so that you can see whether or not it's correlating to actual gold or silver. And let's go ahead and let's make, I need to put that in the window here. Let's put it in the actual chart, and let's go ahead and we'll make that let's make that a dark line. Let's make that a black line out here, and let's make it nice and thick. Let's do that. We'll make it, there we go, so it's very detectable. And so there is the U.S. dollar index. So here's the U.S. dollar index. Now, remember, this is, you've got the U.S. dollar index and the gold chart out here. So don't be paying attention to where it's positioned on the chart because you've got two different axes that you're dealing with out here. But what you can see is the correlation. For the most part, there are times where it comes a little bit unglued, but for the most part, you can see how well the U.S. dollar index tracks the commodity out here. Let's take a look at where we're at right now. And where we're at right now, you can see this little move higher off of the October 15th there. That's where my cursor is. And so you can see this move higher, and that says, okay, the U.S. dollar index was getting weaker out here. Then what we saw the U.S. dollar index move lower, right? It's inverted, right? So the U.S. dollar index was getting stronger on my chart here. It's inverted, so that means it's moving lower. What did we see take place with the price of gold? It, too, was moving lower. Now what we've seen here is we've seen this move higher inside of gold. What has the U.S. dollar index been doing? It's been getting weaker out there as well. And if we take so what you've got when you take a look at the euro, that's why it's so important. It's why I'm covering it out here, is because if this correlation, which it's working right now, right? This correlation, you have to say when you take a look at this chart, at least I have to say when I look at this chart here, that when we take a look at the U.S. dollar index and what's going on inside the commodity sector, we'll go back and we can take a look at light sweet crude as well. We can see that correlation is working right now. So the correlation is working, right? We come back here to the highs that were formed inside of Goldilocks as it was hitting. Now, what you're also looking at inside gold is you're looking at the downtrend channel, this red diagonal line. This is the daily chart. So you're looking at a downtrend channel out there that's been in place. That's coming off of the highs back here in December. So gold will really have broken out. It will have broken out just like the euro would break out when it gets above that descending price channel. That's up quite a ways here. So you can still see a nice little bounce here inside of gold. But what we have to be paying attention to at the same time, can't overemphasize this, is what's going on inside the euro. So gold could easily, just simply a normal retracement, get you up to 1304. It's trading at 1263 right now. So you've got another maybe $40 to the upside. But don't be fooled by that $40 the upside move, because this descending price channel has acted as significant resistance, just as we took a look at inside of the euro out there. So these things here are most certainly working in tandem. If we go take a look at high-ho silver out here, let's go ahead and do the same thing inside of silver. Let's go overlay the U.S. dollar index chart out here. So we've got DX, $F, and let's go ahead and invert it. Let's go ahead and actually place it on the chart out here. Let's go ahead and we'll make that a nice dark black line out. Whoops, I got to actually grab the color. That would be good. So let's go do that, and then let's make it a nice big thick line out here. So you can see that really we've got the same correlation. It in essence is still working out here. It looks like it was off just a tad for maybe about a week or so, but right now that is really what is in place. Now in the case of silver, and silver probably gives you a little bit better picture than gold does with regard to the breakout, is because we're taking a look at the descending price channel coming off of the highs back here in November of 2012. That's the descending price channel that you see on my screen out here if you're watching us on Tiger TV. And that says that silver ought to hit that mark somewhere around the price level of maybe $20.75 or so. Right now you're about $20.33. So we're going to be paying close attention to this red descending price channel line as well. So we've got the euro, we've got the correlation between U.S. dollar index and the currency pairs out here, and that's what you've got to keep an eye on, at least in Steve-O's opinion out here. So that covers the commodity. Well, it covers some of the commodities. Let's go take a look here at the natural gas. Natural gas, been a rocket ship. It has now made that 1.272 butterfly sell pattern. You haven't seen a reversal candle out there, and until you see a reversal candle, this means that if this area fails, which is the 426 range, you're trading at 427 right now, then 447 could be in the cards. It is in the super hyperbolic, in the overbought territory, so it says that we should see some type of retracement here soon. Whether or not it's going to be this area, that I can't tell you, the 426. What I can tell you is that the market will tell us, and the market will tell us, and it will tell us by giving us a reversal candle. Always does, always has, and always will out there. Sometimes you got to use a little blendy technique out here, but just like when we were coming on the show here this morning, we were looking at the 30-minute chart, and I said, okay, here's what we're going to take a look at. The market has to work off this little relief valve. It needs to bounce in order to do that. That's really what we have going on inside the market right now. We know that the area that we want to watch is the 1808 range. Because at 1808, that's going to tell us whether it was just a, whether it's setting up an A to B equals CD down on the intraday charts, or whether what we saw was a nice little significant low inside the markets, and then the markets move higher from this morning's low. Now, if we go take a look at what's going on inside, we didn't really spend much time this morning taking a look at the futures markets. Let's go do that by taking a look at the 120-minute charts out here. And as we take a look at the 120-minute charts, what's interesting about this, if we take a look at the ES Mini, this is the 120-minute chart we're looking at. What I noticed this morning as I was taking a look at chart patterns, we had this nice little rising price channel that price was traveling in, and the ES Mini broke out of it. Turned out to be a false break. That was on November 20th. Got back inside the price channel at about 8 o'clock in the morning on November 21st. The real break, though, that did occur, that was a real break, that took place at 12 noon, November 29th. That was the day after Thanksgiving. Now, what we have seen take place really since that time period is really a consolidation move. Now, it was easier for me to go ahead and take that consolidation back all the way into the formation of about 5:15 in the evening on November 13th. So from November 13th through today, what we actually see set up here inside the ES Mini is a 33-point consolidation. That says to me that if we see a break either above or below, and when I say above, I'm really referring to the price point right around, we'll call it 1812. So at 1812, if we see the ES Mini get above that level and hold, that says the ES Mini ought to trade up to 1844. That's the bullish side. On the bearish side, we would see price move all the way down to the bottom of the consolidation. That's right around 1777. A break of that area sends us down to 1745. 877-927-6648. Be right back, folks.
It's always better when we're together.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Dow's off 35 points right now. S&P is back about 3 points. So we were taking a look at the consolidation range inside of the ES Mini out there. If we take a look at the Dow also traveling in a consolidation zone, about 185-point move out here. The top of which of the consolidation, I'm just simply going to use a kind of a middle of the road approach here for that consolidation, make it the easy consolidation pattern. That is the one that would be right about the highs of 16,054. So you get above 16,054, that sets up about a 185-point move to the upside, right around 16,239 out here. If we take a look so far at the retracement, again, is coming off of a overbought condition, so that retracement needs to work off this 120-minute chart that we're looking at on our screen here. Thus far, the damage not too shabby out here, only just slightly above the 0.382 retracement level. And that is inside of the Dow futures contract. So, what are we going to be paying attention to today? Well, most certainly we've got to go take a look at the VIX index out here. If we go take a look at the VIX, it is above the 50-day exponential moving average right now. That's the little red line at the top of my screen here, and that is at a price point. The 50 days at 13.89. Right now you're traveling at 14.04. The day is not over, but boy, you really rejected that 50-day exponential moving average yesterday. We'll see if this is going to be a second day of rejection out here. Remember, when I take a look at the VIX, so I've had a number of emails from folks that our listeners to Basil out there, and he's doing well. He's recovering, and he'll be back with us soon. And he uses the VIX different than I do, so I'm just going to share with you the way that I use it out here, and that is really paying attention to where it is in relationship to the 50-day exponential moving average out there. Because what I know, you can take a look at any stock chart, and when the VIX is below the 50-day moving average, the market does one of two things. It either moves higher or it consolidates. Now, typically it moves higher. We'll take a look at the last time that the VIX got below the 50-day exponential moving average back in October 16th out here, and you can see while price stayed below that 50-day, price just simply moved to the upside. As soon as it got above the 50-day exponential moving average, that was on December 2nd, that's when we saw the market start to move lower. Now, the VIX here made the normal retracement, the dead cat bounce, a 0.382 retracement. That was coming off of the high out here on October 9th down to the low that was put in on November 15th. So it made that first dead cat bounce move. If you see the VIX today get below or close below 1389, it's just signaling to us that, you know what, the markets want to continue to move higher. And you can take the VIX index, you can take this 50-day, you can take it back further. If we look at the VIX, let's just come back right here to the trading session of July 5th. So we came back from the holiday on July 4th out there. The VIX moved back below the 50-day exponential moving average. What did we see take place? We saw price just simply move to higher ground out here. As soon as the VIX got above that 50-day exponential moving average, that was on August 15th. Then we saw a market start to retrace lower out there. And in fact, that case, we saw the VIX get up to about the 0.618 retracement level, which is at a price level of 1806 before it started its move south. So that's what's going on inside the VIX right now. The Dow is off 34. With regard to the New York Stock Exchange, the net, what it needs today, I believe, is like 87, 88, something like that, with regard to net advancing issues. Right now, as we speak, I wish I could get to it. Got a little slight problem out here. No, come on, let me do it. I know we're going into the hard break here. What's the right now? Right now, you got 187 net decline in issues. Really, no big deal out there, folks. It is Terrific Tuesday. I hope you're off to a great day. Stay tuned. The Money Masters show is up next. If you're off to start your day, have a great one, and I look forward to seeing you in the AM. Take care, folks.
Yeah, it's always better when we're together.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.